Hi everyone, welcome to Deal Street Asia Greater China virtual session that is part of our Asia PVC Summit 2022. I am very honored to introduce you our speaker today, Chibo Tang, Managing Partner of venture capital firm Gobi Partners. Thank you for taking the time, Chibo.
No, thank you for having me. It's good to see you again.
Good to see you. For those of you who don't already know him, Chibo first joined Gobi Partners in 2009 in Shanghai before he relocated to Hong Kong to lead the firm's deal-making efforts across the Greater Bay Area. So Greater Bay Area, or GBA, which include Hong Kong, Macau, and 9 cities in southern China, is now poised to become an integrated business and technology center in China. So Chibo is one of Hong Kong's most active investors behind the city's fastest growing companies, including Airwallex, Pronetics, WeLab, One Degree, Animoca Brands, and GoGoX, just to name a few. Without further ado, let's start with a development in probably the most eye-catching industry right now. So these days, people talk a lot about tech, working remotely, and digital solutions. And also, we can't help but pay attention to the metaverse and Web3. As an investor of Animoca Brands, what do these buzzwords mean to you, and where do you see investment opportunities in the sector right now?
Yeah, no, thanks for the introduction. I am based here in Hong Kong, so we do see a lot of opportunities in the Web3 metaverse space. Animoca is obviously based here in Hong Kong, as are a number of other major crypto players. I think over the years, crypto has taken a lot of ups and downs. I think we're recently, most recently, in a more of a downturn. But I think that whole ecosystem is still at a very early stage of development. For traditional venture capital investors like myself, I mean, we invest across a very broad range of tech categories. And so Web3 is an area that is new. We're keeping an eye on, and we're making very selective bets. But I do believe that, as we say in China, the water is very deep. And there is, a whole new generation of investors and quote unquote crypto natives that dedicate their full-time jobs night and day to studying opportunities in that space. So, I do think that there is a lot going on. There is a lot of hype, and investors will just need to be aware of all that.
How does the recent crypto sell-off impact the long-term prospect of crypto-related venture investments in Greater China and also the overall Asian region?
Yeah, I mean, I think that's an interesting question because, there is the term long-term in there. And, if you believe in the future of crypto, if you believe in that Web3 is here to stay, then, this recent downturn is simply a blip, right? I mean, in terms of the long term, like it's here to stay. And so if you should just keep holding and still keep looking for new opportunities. But if you're looking at the short term, then yeah, I mean, I think that there will be a lot of some concern. I think there's a lot of uncertainty. I think for those players that are not in it for the long term, or are not investing for the future, I think that there will continue to be more sell-offs, and some of the I would say less serious players may be washed out in this next run. So, I think in all that is a good thing for the entire industry, and we'll see how it plays out.
Do you think the crypto sell-off is, to some degree, comes alongside the market downturn we're seeing right now, and it will probably recover with the market recovery later?
Yeah, I mean, I think we've seen over the last couple of years that despite what many people had believed initially, the crypto universe is quite tied to what we see in traditional financial markets, right? I mean, it's not a great hedge if stocks are going down for you to put all your money into crypto. I mean, most likely crypto is going down as well.
Okay. And outside of crypto-related investments, Gobi also investing in many other sectors. Can you
Yes.
walk us through your focused industries right now, and in general for Greater China market, your investment outlook?
Yeah, of course. I mean, I think we do take a slightly different approach for investments allocation here in Hong Kong versus the mainland. In Hong Kong, we're still very excited by opportunities in AI, in fintech, in logistics, increasingly in healthcare. I think that the government and a lot of local stakeholders are putting a lot of money into those areas. On the mainland, I think Industry 4.0, advanced manufacturing, also healthcare, a lot of cross-border Chuhai opportunities, supply chain. I mean, those are all areas that we're looking very closely at. Obviously the government, given their, policy changes and directives, a lot of venture funding has gone into areas like deep tech, semiconductors, EVs, things like this. But I do think that a lot of investors have rushed into those spaces and put a lot of money into those sectors in the last 18 months, and probably in too concentrated of a fashion. So, a lot of the valuations are quite high these days. And, I think it's going to take some time for a lot of those founders and companies to reassess their expectations and, to allow time for those companies to actually catch up to those values.
Mm-hmm. And it's interesting you mentioned some of the much touted industries by the Chinese government these days, including deep tech, I guess, green energy, semiconductor. How do you think the government agenda is influencing VC decision making nowadays?
Well, I mean, I think what we've learned over 20 years of investing in China, like the government directives really do provide a very clear blueprint for the future. And so we've learned also to kind of, go along with what the government is saying. But that being said, I think that there is, there are hype cycles that those policies cause, and with such a big amount of money and capital kind of focusing on those areas, that does create certain bubbles. And so I think you need to be selective with timing and with deals, and still maintain rigor in your own valuation assessments.
How do you approach these industries nowadays? As you mentioned, because of the government policies, we're seeing this hype cycle, valuation is very high. How do you approach such deals?
I mean, we approach them very cautiously, right? Especially when, a company's been around for 18 months and it's $1 billion company in terms of valuation, right? I mean, like we look at that deal very, very carefully, with some skepticism, and with some caution. But I think being early stage investors primarily, we tend to look for we try to find those deals before the hype actually reaches it, before they actually do those 2 or 3 rounds later.
So what's the standard and matrix that value the most to you when it comes to investing in this sort of early stage companies? And especially when we think about semiconductor, deep tech, most of times when they are at early stage, they don't really generate much revenues. So it's quite hard to look at the financial details and make the decision.
Yeah, I mean, I would say over 90% of our deals are really not based too much on financials. I think, because we are institutional investors, some traction does count. So the ability to prove that, they're able to sell their product, the ability to have a product. But I think, most important is of course the team, their background, their, experience, the way that they're able to craft their story and their vision for the future. That is probably the biggest kind of thing that we look for. I think we are more, I guess we're a bit shielded here in Hong Kong from, a lot of, like, most of the capital that sits in the mainland China. And, I think over the last few years, we found that, valuations in Hong Kong have been a lot more reasonable, which is why, we've been deploying quite a lot in this local ecosystem.
That's very interesting. We talk about Industry 4.0 and as well as advanced manufacturing, semiconductor. These sectors are traditionally not focused by USD funds in Greater China. So traditionally, I think they focus more on China's now very heavily regulated consumer internet sector. That is why leading to a major trend we're seeing these days. Many VC players are shifting from Greater China to emerging markets, including Southeast Asia, setting up an office or even moving their headquarters to Singapore. So do you think Greater China is losing its attraction to global investors, especially those investing in USD money?
Yeah, no, I mean, I think definitely not. I mean, I think that long-term investors will continue to have interest in China. And I just think that the opportunity sets will change over time. I think that, without a doubt, consumer internet is no longer like the darling kind of sector in China. And probably rightfully so. I mean, there's been a lot of innovation there already. Traffic and consumer like users are really expensive to come by these days. And so, for fund managers that have built their track record and expertise based on those sector opportunities, then, probably they're not going to have a lot to do over the next few years in China, right? And so, it makes sense for them to kind of go and find the next, set of opportunities in a different region where, there is some lag behind China. And so, that's what we're seeing in Southeast Asia. That being said, I mean, I think that the new opportunity set in China, where you mentioned semiconductors, deep tech, advanced manufacturing, things like this, those continue to present very attractive opportunities for investors that know how to invest in those areas and have the I guess the staying power to remain in China.
Is there any challenge for overseas investors to invest in like semiconductor, high tech, deep tech, which could be considered as sort of sensitive technology by the Chinese government? Do you see any challenges for them to invest in those sectors?
Yeah, I mean, I definitely, yes, I mean, I do. That's the short answer. Again, I mean, a lot of those sector opportunities, I mean, they take a little bit more capital in the beginning to get running. A lot of those are funded by more state-owned type, capital sources and local governments. And so, by the time those come to, private market investors like PE type investors, the valuations are already quite high. And, given the sensitivity of those sectors and those technologies, most likely a lot of those companies will want to list domestically. And so, or at least keep the option open. And so, they are more prone to look for RMB in the early to middle stages. So I do think that there is challenges for US dollar investors to invest in that space, but that's not an end all be all. I think that if US dollar investors have the right type of access and they're patient, I mean, I think there still are plenty of opportunities for them.
Is there any approach that they can, or any strategies they can follow in order to better capture this predominantly RMB denominated opportunities in mainland China?
I think it really comes down to the founders and those specific opportunities, right? I think that the China market changes so quickly. Right. I mean, today, it's easiest probably for them to be listing in China on the domestic RMB markets. In another 5 years, who knows, right? I mean, I think very quickly we're seeing that Hong Kong Stock Exchange is becoming a very attractive listing venue for Chinese startups. And so, that is overseas structure. And, I think that would present a lot of opportunity for US dollar investors as well.
Mm-hmm. Talking about public listing, whether it's listing in China or Hong Kong, I think both are very viable solutions for startups these days. But another location people continue to look into is the US market, and where we're seeing quite recent development on the US-China audit pact signed, I think last month. Where do you see this new pact taking us?
Look, I mean, I think the U.S. market will remain, a very attractive listing avenue for companies all over the world, simply because there is, it has the most liquidity and probably the exit multiples are the highest for tech-related companies. But that being said, I mean, I don't think that, the audit pack is gonna change much. Because of the macro environment. I mean, if especially for sensitive sector players, it's more difficult for these Chinese players to be listing in the U.S. This audit pack is not going to make a difference for those companies that are originally even going to go to the U.S. As their original plan. I mean, that's not going to change either, right? I do think that this recent development is interesting in that it does show, it is kind of a sign that the US and China are still willing to do business together, right? And the fact that, they're just looking for ways to add more rails and transparency, I think in general, that's a good thing.
What about existing Chinese listed company in the US? How will this new pact influence them moving forward?
I think that they're gonna, for companies that don't have problems, I mean, it shouldn't impact them at all, right? I mean, for those bad actors that, those few bad actors that, that have tried to work around the edges, I mean, I think that they will have to consider, what this means for them. But, hopefully there aren't a lot of those.
While China remains a very promising market longer term for most investors, we do see a group of China players, especially in the VC landscape, whether it is high net worth individuals or unicorn companies or GPLPs, they're all moving from China to Southeast Asia to set an overseas presence. In general, what do you think is drawing China money to flow into emerging markets?
Well, I mean, I think it goes back to, our earlier discussion about, US dollar fund managers in China and, finding it more difficult to be investing in, traditional sectors like consumer internet and things like this, right? I mean, they're looking for new market opportunities. They're looking for new ways to leverage their own expertise and track record. Southeast Asia makes a lot of sense. I mean, in all of the geopolitical tensions that are around these days, I mean, Southeast Asia seems to, fit nicely in its own kind of niche. And so, over the next few years, I do see a lot of more heightened activity in Southeast Asia. And, for these Chinese fund managers and, high net worth individuals moving over, I think that all power to them. And I think that there is a lot of opportunity on the ground and, may the best fund win.
Okay, what about the challenges as a newcomer to a new market? What do you consider to be their major challenges? And especially when it comes to Gobi, it's one of the first China VCs to go global. What do you think people could draw from the firm's past experience?
I think it's going to be, they're probably the biggest challenge is expectation management, right? A lot of these, investors coming in for the first time, they're coming in with the mindset that, oh my gosh, this is like a completely new market. It's probably going to be blue ocean. And we're going to be able to do so many deals and get so much access. I think the reality of the situation is, look, I mean, even for Gobi, I mean, we were here over 10 years ago, right, in Southeast Asia. And today Southeast Asia ecosystem has also come a long way, right? I mean, not everything is just focused in Singapore. There are a lot of local ecosystems all throughout the region, with local players, local venture capital firms, a lot of MNCs, corporates, a lot of local family offices. Like everyone is trying to find the best opportunities, and a lot of people are going after the deals there. So for new investors coming in, thinking that it's a blue ocean, I mean, I think that they're going to have a little bit more competition than they probably expect.
Mm-hmm. So what do you think would be let's say suitable strategies for these newcomers to help them better adjust their reality versus their expectation? What do you think they should value the most when it comes to expanding into a new market? Is it talent? Is it new money, new local partners?
Yeah, I mean, I wouldn't want to give advice to any of these like very experienced, managers, but I'll just kind of say what worked for Gobi, and what worked for Gobi was just being able to localize, right? Finding local partners in those local markets. Whether that's within the Gobi team or ecosystem partners, right? And not just LPs, also corporate partners and strategic partners that can help our portfolio companies expand in that market and continue to build the teams and their business. And I can't stress how important that is, especially in this day and age where the ecosystem is not as new as it was 10 years ago, right? When venture capital was really first just beginning. Today, there's pockets of innovation everywhere, local players everywhere, and so you really need to be plugged in, especially if you want to invest at the early stage.
Mm-hmm. So with this trend, we're seeing many players who are originally from China talking about backing and investing in Chinese global businesses or business that started in China but are looking at the global market right now. So for these kind of play, which sectors do you think China businesses could take a lead at the global stage over the next decade?
I think like sectors like AI, right? I mean, sectors like, industry like advanced manufacturing, right? All the industry 4.0 plays. China has just built such a large advantage and kind of sector expertise in those areas simply because of the amount of data and the amount of kind of manufacturing that they have in that market. And so just being able to upgrade all of that and create all the new technologies that come with that, I think that's going to be something that is very easily going to be exported outside of China. And so those are areas that we find very promising. A lot of the supply chain know-how and exporting the supply chain capabilities to facilitate cross-border e-commerce opportunities. I mean, those are also continue to be interesting. So, I do think that there is a lot that, Chinese investors can still look forward to.
Okay. And I think in the longer term, for businesses that are going global or venture capital companies going global, they would eventually want to invest in local companies. But given the current geopolitical uncertainties, I think their LP composition could potentially pose some sort of challenge for them to invest in local champions. Do you agree with this sort of how to say assumption? What are associated with mainland, especially for Gobi, you have LPs including Alibaba's Entrepreneurs Foundation. Do you see any obstacles at all when it comes to investing in startups outside of mainland China due to the geopolitical reasons?
I mean, from our perspective, no. Like we haven't found it to be an issue, and I think other than Alibaba being one of our key LPs, we also have a very diversified group of LPs, including a lot of local regional LPs in Southeast Asia. And so, like the entrepreneurs that we talk to, if we have those strategic resources that they can draw upon, then great, right? And they're happy to draw upon them and learn from these very successful corporations. If they don't feel like those resources are beneficial to them, then they don't need to draw upon them. So I think it's quite simple.
Okay, understood. And I think Gobi just closed an early stage tech-focused venture fund called Gobi Super C2 to focus on Malaysian market. Can you talk a little bit about the firm's longer term plan for investing in Southeast Asia?
Yeah, I mean, as I mentioned before, I mean, we've been investing in Southeast Asia for over a decade. So, we're very well versed in the local ecosystem. We continue to be bullish on Southeast Asia, on, GBA, all the areas that we focus on. So over the next 5 years, we'll continue to deepen our presence there. But I think more importantly, we're also thinking about what's next, right? And so, 2 years ago, we've actually began to expand our franchise and our platform out to the Middle East as well. Given our time in Southeast Asia, we've been exposed to, other opportunities that include, the Muslim population, right? And technologies that could potentially be catered or service that population. And so, we've coined a term called Taqwa Tech. Taqwa is the Islamic word for faith. And 2 years ago, we set up our first Pakistan fund, and now we're the most active investor there. So, I think we continue to deepen presence in the markets that we already operate, and we also think about spend a lot of energy thinking about what's next.
It sounds very interesting. It's very exciting for what you mentioned. So focus on Southeast Asia a little bit. Does the team plan to probably allocate more funds to this region as the capital inflows from elsewhere to Southeast Asia could potentially bring more competition to the market?
Yeah, I mean, we definitely continue to raise and deploy more capital in Southeast Asia. Traditionally we've always been kind of more early stage players. So actually we welcome a lot of these new fund managers coming in. Most of that is going to be focused at the growth and traction stages. So we're happy to introduce our portfolio companies to them.
So for Greater Bay Area, you mentioned earlier this year a plan of raising about 2 billion Hong Kong dollars for the new AEF GBA fund, which is a fund 2. How will its mandate be different from the fund 1?
Well, the first fund was it was quite unique. It started in 2015-16, and it was primarily focused just on opportunities within Hong Kong, more early stage opportunities, so seed and Series A or pre-A. For the second fund, we're looking at slightly more growth stage opportunities and also focused on the overall GBA region.
Okay, and would you be able to share with us a little bit more updates on Fund 2 and maybe your capital deployment plan for Q4 and next year?
Yeah, no, Fund 2 has been going really well. We had our first close in the middle of last year. So we've been investing for a little over a year now. We've deployed close to $50 million and expect over the next 18 months or so to deploy another 100. So, we're very excited about this next 18 months. I think that there is a lot of uncertainty in the market as a whole. But with all the other investors kind of pulling back for the rest of the year and taking it easy, I think this is a great time for us to look for opportunities at much more reasonable valuation ranges. And I think that over the next 12 months, I think also a lot of entrepreneurs and founders and startups will also be resetting their expectations. And so, hopefully we'll find quite a few good deals out there.
Sounds great. Will you be able to also share maybe the time frame for the final closing of Fund 2?
Yeah, I mean, we're hoping to close it within the next 3 or 4 months. So, where we are getting very close, I think we've already kind of oversubscribed our original target. So, I think things are going very well.
Oversubscribed as in by how much? So what is the final target right now for you?
I'll let you know when we issue the official press release.
Of course. Thank you very much. That's all my questions. And we're looking forward to hearing more from Gobi's updates in new markets.
Perfect. Thank you.
Thank you for joining us today.